Welcome back, traders and investors. Today, we're diving into January 2026 market fundamentals, covering major FX pairs, gold, silver, and the US 30 index. We'll break down the macro picture, central bank moves, key drivers, and what could move your trades this month. Whether you're trading Forex, metals, or US equities, this video will give you the big picture outlook to start January on the right foot. Let's start with the macro picture. The US dollar weakened in 2025, and early 2026 is showing more of the same. The Fed signals a slower pace of rate cuts, keeping the dollar under pressure. Meanwhile, the ECB is holding rates steady, supporting the euro, and Australia's RBA is now considering possible rate hikes in early 2026. Emerging markets like India are showing strength with rising Forex reserves, supporting local currencies. Overall, markets are in a cautiously optimistic mood, but volatility is expected around macro releases and central bank statements. Now let's look at the major currency pairs. Euro to US dollar, bullish bias. ECB's pause and Fed's slower easing favor the euro. Watch German economic data and Eurozone inflation. Pound sterling to US dollar, range-bound to modestly bullish. GBP strength depends heavily on UK data, like PMI and labor numbers. US dollar to Japanese yen, data-driven. BOJ policy announcements and CPI will determine whether the yen strengthens. Australian dollar to US dollar and NZD/USD, high beta currencies. Supported by commodities and risk sentiment. AUD looks bullish if global optimism continues. NZD is more sensitive to early January liquidity. US dollar to Canadian dollar and US dollar to Mexican peso, bearish tendencies. Commodity strength and USD weakness could push these currencies higher relative to the USD. Next, let's talk gold and silver. Gold, XAU/USD bullish to neutral. Central bank buying, safe haven demand, and low real yield support gold. But watch for short-term selling during commodity index rebalancing. Silver, XAG/USD bullish but volatile. Strong industrial demand supports silver, but liquidity is lower than gold, so swings can be bigger. Both metals remain attractive, but traders should monitor USD moves, real yields, and index flows to anticipate short-term spikes or dips. Finally, let's check out US 30. The Dow finished 2025 strong, and early January shows tentative optimism. Drivers include resilient earnings, lower interest rates, and AI-driven growth, though narrow market leadership and high valuations are risks. Short-term swings are likely, especially around earnings reports and Fed updates. Overall, the US 30 has a neutral to modestly bullish bias for January, with careful attention to economic data and profit-taking. Here's the summary for January 2026. Asset bias. Key drivers. Gold, bullish neutral. Safe haven, central banks, real yields. Silver, bullish but volatile. Industrial demand, supply deficit. US 30, neutral bullish. Earnings, rates, growth sectors. Euro to US dollar, bullish. ECB versus Fed divergence. Pound sterling to US dollar, range bound. UK macro surprises. US dollar to Japanese yen, data dependent. BOJ, yield differential. Australian dollar to US dollar and NZD/USD, risk sensitive. Commodities, global sentiment. US dollar to Canadian dollar and US dollar to Mexican peso, bearish. Commodity currencies, USD weakness. Studio microphone. This table gives you a quick visual reference of what to watch and where the potential opportunities lie. Mark your calendars for critical events in January. January 6th to 8th, US CPI and labor market data, major USD movers. January 14th, ECB and BOE policy announcements. January 28th, RBA CPI, could impact AUD and risk sentiment. Keep an eye on these, as they can trigger volatility across FX, metals, and equities. And that's your January 2026 fundamental outlook for FX, gold, silver, and US 30. If you found this helpful, hit subscribe, smash that like button, and turn on notifications so you don't miss upcoming market updates. Drop a comment below with which asset you're most interested in trading this month. I'd love to see your thoughts. Thanks for watching, and happy trading in 2026.